of these rewards, and which they do all the time, just like raising prices. Look, now the airlines charge you to check luggage. They charge you for food. They have to find all sorts of ways to increase prices because of all the inflation. What I think would be interesting is probably none of this shows up in the CPI. So every time an airline reduces the value, you think there's a frequent flyer. You think that when they don't look at the value.
The component does not show up in the CPI.
Yeah, that's my point.
Such show up in the CPI, but I note it's not inflation as such that's driving up airfares. It's specifically increases in fuel prices.
Well, what do you think's driving that?
CPI, but not in the course.
Yeah, but that's inflation that causes that. That's all this money printing that's causing the price of oil to go up. I mean, that's where it comes from. If we weren't printing all this money, oil prices would be going down.
That's absolutely wrong. That's 100%
what do you mean?
Wrong.
How is that wrong?
The oil is supply constrained, and as you're having middle-income countries experience economic growth and consume a lot more fossil fuels, it's very difficult to increase supply at the market. So a little bit of an increase in demand causes a sharp increase in price.
We have increased.
That's why prices have had such a different trajectory than all other prices in the economy over the last few years.
No, they haven't. Other prices are going up too. The supply of fuel. The supply of fuel has increased. I'm talking about the demand. I'm not even talking about the supply right now. When you increase the supply of money,
as fast as demand has. That's why the prices go up. And I can read the same.
All right, so
statistics you are. Inflation is low and stable in the 1-2%.
No, it's not. But let me ask you a question. So if the Federal Reserve wasn't,
are you reading shadow stats? Am I supposed to? Is the government lying to us about the inflation rate?
I think the way they calculate the inflation rate doesn't give you an honest reflection of what's really happening. But here's the question I want to ask you.
Let me ask you this then. Hold on.
No, I'm asking you a question first. You can ask me.
Is the economy in recession?
Yes, it is in recession. Now let me give you this question.
How long has the economy been in recession?
The entirety of the Obama presidency. But let me ask you the question that I want to ask you.
Was it in recession during the Bush administration too?
Yes. Let me ask you this question, please. If the Federal Reserve was not printing $85 billion a month or $90 billion a month and buying mortgages and buying treasuries, do you think oil prices would still be $93 a barrel, or do you think they would be lower?
They'd be roughly the same. I mean,
roughly the same. So you're hold on. Do you think? Wait a minute.
And so oil prices would be a little bit lower than they are right now. But the economic fundamentals that have driven oil prices over the last, especially during, it's not the last couple of years that oil prices have been going up. It was, 07, 08 that you had the big spike in oil prices.
The Fed
has been driven by monetary policy.
Yes, it was. The Fed has been creating too much money. They've been keeping interest rates too low for a long time. That's why oil prices went from
monetary policy that was driving the spike in fuel prices. Why did fuel go up in price so much faster than everything else?
Well, fuel went up faster than some things. There are other prices that went up almost as fast as. Look at the price of gold that went up. Look at the price of silver. Look at some other metals.
Gold is not a consumer product.
Sure, it is. It's money, but people buy gold. It's a product, but also look at a lot. Have you looked at the price of beef recently? Do you know what it costs to buy live cattle? Have you seen the chart of cattle prices?
Fuel is a significant cost component for food, and we also have public policies that encourage the diversion of corn into fuel use rather than food use, which drives up the price of animal feed and causes food prices.
And
also those same phenomena of rising middle-income country demand for meat. At the same time, they're burning more fuel. They're also consuming more beef and chicken and such, and that's driving up food prices.
But they're producing more of those things. The problem is they're printing all this money to buy up dollars. Money supply is expanding all over the world. That's why prices are rising all over the world. But you think that if the Fed wasn't printing all this money, oil prices would only be a little bit lower. What about real estate prices or stock prices or bond prices? Where do you think the stock market would be or the real estate market would be if the Fed wasn't printing all this money and buying up all these bonds and mortgages every month?
I think quantitative easing has helped support various kinds of equity of investment markets.
It's supporting prices
because it's fostering real economic growth.
No, it's not fostering economic growth. if we're printing money, and therefore the new money is bidding up prices. So if you take away the quantitative easing, stock prices come down, real estate prices come down, oil prices come down. All prices would start to come down if the Fed wasn't printing all this money. I mean, that's the source of the inflation. It's the Federal Reserve. So it's not that there's a huge, change. I mean, we're actually producing. Look at all the oil that the U.S. is producing. We're producing more oil than we've ever produced. We're using less oil than we've used in the last 20 years. So we're barely using any oil. We're producing more of it, yet the price is going up anyway. And that's because of all the money that is being created by the Fed. Now, I got a break. If you want, I'll answer your questions that you're trying to ask me about whether the economy is actually in recession, because it is, and whether QE is having any positive effect. If you have any of those questions, I'd be happy to answer them. We got a quick break. We'll be right back.
The Peter Schiff Show.
If knowledge is power, then the Peter Schiff Show is a uranium-enriched 10,000 megawatt nuclear reactor. Stay plugged in. Stay brilliant. This is the Peter Schiff Show.
We are talking with Josh Barro, political editor at Business Insider. And, Josh, my view on money, I don't want, private sector coming up with some kind of its own fiat alternative to what we have now. I'd like to go back to the sound money, the money that the founding fathers wrote into the Constitution. They put us on a gold standard. Gold and silver are money. They've been money for thousands of years. They won. Gold became money because the people wanted it as money. It was better suited to be money than all the other commodities that were tried as money. And money, I think, is one of the greatest inventions of mankind, in that it enables commerce and trade and allows for much more, a better division of labor and more wealth. And there's a lot of great things that you get from money. But I think when you let the federal government try to decree paper to be money that has no intrinsic value whatsoever, and then print as much of it as they want to try to artificially manipulate markets or buy votes or do whatever they're doing now at the Fed, I think it has disastrous economic results. And I think we're experiencing some of those results now. We've been experiencing it for a long time, but it's going to get a lot worse in the years ahead.
Well, but the problem with your perspective there is that you have a misdiagnosis of what the current condition of the economy is. So I don't know how you expect to evaluate what's a good policy or a bad policy when you're under a misconception like that we have high inflation and a shrinking economy.
Well, I think we do. I think we do have high inflation.
But
because
on what
inflation...
basis do you think that?
I'll answer your question.
I read the tables that come out from the Bureau of Labor Statistics and the Bureau of Economic Analysis, and what I see is a tepid but positive recovery with economic growth somewhere in the ballpark of 2% a year real growth, and inflation somewhere between 1% and 2%.
Yeah, that's exactly that.
Certain kinds of products that are rising in price, and you have certain kinds of products that are falling in price, and overall we have low and stable inflation. And people like you who advocate for a sharp change in the monetary regime can only defend that argument by wildly misstating the actual trajectory of price.
All right. Let me finish giving you the explanation. That's what the government wants you to believe. Okay, first of all, the definition of inflation is not prices rising. Inflation is an expansion in the money supply.
Yes, that is the definition of inflation.
No, it's not.
Inflation
It is
prices.
No, it's not.
It is not the expansion of the monetary base.
Yes, it is.
This is what inflation means.
No, it doesn't mean that. Okay, if you go back and get an old dictionary and look up inflation, it is an expansion of the money supply.
At a new dictionary.
Because they changed the definition.
Dictionary.
Yeah, but I don't care if they tried to redefine the term. Inflation has a meaning. The word inflate
so why
means
should we
to
care?
let me finish. Let me finish telling you what inflation is, because you don't know. Okay, so the word inflate. No, you don't.
You're the one who doesn't know what
no, you don't know what it means. The word inflate means expand. How do you expand prices? Can prices expand? Right. When you inflate a balloon.
Inflation means a rise in prices.
No, the government changed what it meant. But the original meaning of the term is to expand the money supply. The result of an
monetary
expansion
base is not a physical thing either. Technically, it can't expand.
It doesn't. Yes, it can be expanded. So when you expand the money supply, you create inflation. That distorts prices. If prices should have gone down by 5%,
hold on. You just made a leap there. You just made a leap, but
I didn't.
There is not an ironclad link between the monetary base and prices.
Yes, there is. No, but of course, inflation.
That's exactly why we're in this situation right now. MD equals PQ.
You're giving me this Keynesian mumbo jumbo. You don't have any idea what you're talking about.
PQ is not Keynesian mumbo jumbo. It's an identity that is agreed upon by economists of all monetary perspectives.
Yeah, I don't care what some idiot economist. Look, these are the same idiot.
Times the quantity.
Yeah, these are the same idiot economists who thought housing prices would never go down, who thought we had a great economic expansion going on in 2007, who were completely blindsided by the financial crisis. I saw that thing coming and described it exactly the way it was going to happen when all these supposed economists who know so much were clueless. They knew nothing about it because they don't understand inflation, and neither do you. Now, inflation is an expansion.
It's great that you called the housing bust, but that doesn't mean that you're right about what inflation is or how the monetary system.
No. I know what inflation is. And let me get back to how it's. No, yes, I do. You don't know what it is. It's not rising prices. It's never been rising prices. You can have inflation with prices falling. No, it's not whatever.
But it is also your contention that prices are rising rapidly, right?
No. Well, I'm not saying they're rising rapidly. They're not rising 30, 40% a year, but they're rising by more than 2% a year. It's just that by the time
How do you know that?
Well, if you took the CPI that they used in the 1970s and used it today and took the same data, you would find inflation somewhere between 5 and 10% a year. So what you have to say is
you're getting that from Shadowstat.
No, I'm not. Shadowstat says it's like 9 or 10%, but they have changed the way. Are you of the opinion that the way wait a minute. Are you of the opinion
they changed the weights for a reason?
Okay, so what you're saying is
the weights because people's consumption patterns changed.
No, they changed it because they wanted a smaller number. No, yes, it would. They changed it because they wanted a smaller number. That's the reason they changed it. So according to what you're saying, there was no inflation in the 1970s either, because if they measured prices back then, yes, it is. If they measured prices back then, the way they're
change over time. The weights they used in the 70s were correct. People consume different things.
Oh no, that's nonsense.
The thing is that
Okay, look, what prices?
A much larger percentage of household budgets than it is now.
But that's irrelevant. You know what? The biggest part of your household budget is rents, and rents are going up dramatically. But you don't see that in the CPI. Look, I've looked at the CPI.
Yes, you do.
The CPI.
Yes, you absolutely do. But
the CPI is a crock. What prices are going down? Tell me where you're seeing prices going down, other than consumer electronics, huh?
All sorts of consumer durables, including electronics.
What? No, I said not.
Fell markedly for a couple of years before starting to rise again.
That's not even part of the CPI. You got to pull your head out of these economic textbooks. You're completely brainwashed. But hey, thanks for coming on the show.